Falling rates and a potentially inverted yield curve, just another headwind for financials. Citigroup shares, though, up after a rough year. The big bank now embracing activist Value Act capital, giving the firm more access to its books and board of directors. The two entering into what it is called an information sharing and engagement agreement, which will allow for a deeper level of engagement and cooperation. So what can make Citigroup rally? What should Value Act try and do, in your view?
In my opinion, Citi's got to come clean. I'm not suggesting they're not, but they got to come clean with every European exposure they have and put it out there for the market to understand. Because I think the reason why Citibank is trading below tangible book value is it concerns with what they have in Europe, and that stems for me with all the problems at Deutsche Bank.
This is the point where Tim starts whining. What do you mean come clean? Like, what are they going to do?
Is that what Tim sounds like?
That's a perfect impersonation.
I didn't realize I had a come clean mantra. That was something that we've always talked about. Definitely
I got to tell you, I think with a big company like Citigroup, I think to have Value Act in there, to have these sorts of, I think it's something that should make investors feel better about. I will say this is that, you know, if the stock hadn't had like an 18% rally off of lows a couple weeks, I'd say that the banks are pretty well set up for decent news to rally on further, but they kind of came back a bit here. So to me, I think you probably have a scenario with the whole group. I know we have a lot of them reporting next week where they are range bound within this last few weeks. I don't think you're going to see anything break.
Well, our colleague Wilfred Frost pointing out on closing, as we all do, on the closing bell, that, for instance, Bank of America last year, throughout 2018, posted earnings that beat expectations.
Yes.
And what did the stock do?
Nothing. Nothing. Although what we've seen with the last, I think, 3 quarters, definitely the last 2, banks seem to have this very lackadaisical, sometimes mildly negative reaction to earnings. And then we've actually seen as earnings have gotten stronger for other groups, banks have really started to rally. I think people underestimate the fact that NIMs are going to be actually better. I think the problem with what's gone on with mortgage rates is that actually the mortgage business is going to be under some pressure. But I think the other parts of their business are actually reasonably healthy, and I expect the numbers to be fine.
I mean, you get Value Act is getting a value in this, right? I mean, they're trading below book value. So in my view, unless you think that there is a global recession in the very near future, and I'm talking about the next 3-6 months, then these are valuable at this point in time, particularly if you think there's any steepening or at least no more flattening in the yield curve and the economy is solid or smooth, not going lower, then you're all right buying the banks.
I know we got to go to commercial real quick. David Solomon, Goldman Sachs new CEO, he's going to be on the conference call, I believe, on Wednesday.
Interesting.
It is interesting because there's only downside, in my opinion, for him being on that call.